Hi, this is Kim Watson. Welcome to a video on using the order book. Now, if I asked you if you could see where the Forex order book and look to see where the buy orders were and the sell orders were, do you think it might help you with your trading? I'll rephrase that. If there were a bundle of buy orders just above a prior high and you were just about to put your stop in the same area and just about to take the trade, and if you could see all those net buy orders, there's more buy orders than sell orders provide up above the price level, do you think price might just be drawn towards that? Well, the answer is probably yes. So you can, of course, go and try and subscribe and pay upwards of £3,000 per month to look at the interbank books, but most retail traders, obviously this is far out their scope. But the good thing is some brokers will share their data of open positions and open orders, so you can actually see what's out there. You can see these open orders, the order book itself. Now, before I get on to talking more about that, let's just cover a couple of principles. Firstly, the principle of supply and demand, because it's important when you're looking at an order book to understand what you're looking at. So if we basically supply and demand where it's matched, we get equilibrium, so we get price not really moving. So if we're running through a market and the price action is really not moving too much, it really suggests that there's sufficient sellers and buyers just to keep that market in check. And it may range into a 20 or 30 pip range, but that's as far as it's going to go. If suddenly some good news comes out, we had recently discussions about a vaccine, and it sort of pushed the markets flying, and we saw markets fly up. They went up until a point where there was sufficient supply, and the supply just provided effectively resistance. So the more and more supply there is, the more resistance you'll get. Now, of course, if you look at it, the flip side of this, you will get support if it's being sold off at some point. Traders will step in and think, I'll take that, and the support comes into play. There's more demand than resistance. So I just wanted to show you that, because as we move forward and look at the charts, and I say charts, well, there is a chart on top of the order book. Now, the other thing, like the principle, is just the market maker's effect, and we've got to be careful where traders often claim it's their actual broker that chases their stops, and I have to say that some possibly do for a pip or so, and may just get a sudden widening of the spread, and I couldn't rule that out with some brokers, and certainly some unethical brokers would do that. But they do have to, a broker, even if they're a market making broker, they will have to show where they got their prices or what they're using their prices from if you push them into the ombudsman. So they know there's an end point somewhere where they've got to show their liquidity providers' prices. If they can prove their liquidity providers' prices moved, and if they're using three, they of course, so they could use the worst one at that time and just pitch you out and take the orders, of course, and they will have a similar book to what I'm looking at here in terms of looking at their net book. So yes, it's possible that a broker can do this and still stay within rules. Now, the thing is, if they do it too often, particularly now online trading room, we get to know, because those brokers that are currently doing it, if they're regularly doing that effectively our traders find them out and move, if they've got sense anyway. Now, market makers themselves, the bigger market makers are out there that are moving money for huge organizations. Their job is basically to effectively fill their current their orders, and the idea to do that, they need continuous flows, liquidity in the market. That is what is absolutely essential for them. So if they have a client wanting to exchange a large amount, they will look for where the liquidity is sitting in the market. So they'll look at the interbank markets. There'll be some understanding with them that they'll look at maybe if they're near a prior high, won't actually look at where the technical aspects too much. They're just looking at the price aspects and looking at the volumes in the order book, and we'll be able to see, well, hang on a minute, there's a bundle of buy orders up there. I want to sell something. I can ease this market. So there's a significant amount of stops sitting around. Any price would give them the opportunity to fill the order with the least effect. So as I say, if they've got that order to sell a large volume and there's an equal a large buy order just above price, well, they'll edge it up towards it. They'll do their best to ease buy to get the price. They could actually start buying, although they want to sell. They might actually start buying a little bit, get the momentum moving, and then when the price hits that level of where the buy orders are, they can then offload their sell orders, matching with some nice volume, and it all matches, and it sort of it has a relatively low impact on the market. We'll see a volume spike if you were looking at genuine volumes, but not a lot of price action beyond where the orders were. So it may just pitch up a little bit and for a few minutes, but as their selling volume comes down, it probably keeps it pretty much held back. Then once filled, they're on to their next order. They're not interested in pushing the euro up to X or down to Y, or the pound up to X or Y. They're just, all their job is to find liquidity to fill the orders for their clients. Now, whilst we may not have access to the interbank order books, some brokers provide their clients with order books, their clients' order books, or orders, I should say, to either directly to clients like Oanda, or other brokers may actually flush the information out publicly. Saxo, you can go and see their order book. There's other brokers out there that've got they're going to be delayed. It's always inevitable. Whichever broker, it's not going to be live data, but it's good enough and to draw some conclusions from. Now, these will vary and do vary in quality, and of course are only a snapshot of the current situation with one broker. I've said a snapshot, but it's a snapshot, and it can be a good sample. Effectively, it's a sample and a good tool when combined with other analysis. So you can overlay some analysis with it, and it can be a good sample. So when we're looking at a big broker, it can give us a good picture of what's going on. Now, I've got data here, and we've got the feed of a large broker, and we've actually overlaid it on some other data, so we can actually see we put price over it as well. So it's not just you're looking at orders, you're looking at where the price is relative to those orders at the time. Now, this is running over a couple of days. When I screenshot this the other week, I just literally pitched it as quite a nice screenshot at the time, and you can see basically, as I said, the sell pressure, so selling pressure, buying pressure. Selling pressure will push price down until you get to that point of where the buying pressure provides support. Now, if you look, these are net orders, so this is not this is just simply the net orders of where price is. When you look at this, you'll see as price has gone down, now the reds are net sell orders, and blue is a buy order. But when you've got these blues above price, of course, they're pockets of buy orders. Now, these buy orders could be stop losses, it could be buy stops, whatever, but they're sitting there above normally prior highs. Quite often you see this sort of sell-off coming here, and it's been backfilled with buy orders. Maybe people jumping on the bandwagon quite quickly as a sort of midday move. It's pushed down, double bottom there, not really done too much. It's come back, dilly-dallied, and eventually whipped through those buy orders, taken them out the next morning. Next morning, come down. There's some net sell orders below there. Look, just whipped out. Price bouncing back up to where its original sort of projected move there, and continued taking out the buy orders at the top there. Then it's news and whatnot, changing the demand and things and supply and of its moving. Technically, it's chopping sideways here, so this would be through the Asian session. You see this quite a bit. You've got sellers putting their buy orders most likely above these prior highs here. Net buy orders are sitting above here, backfilled a little bit. Some sell orders there, of course. There'll still be sellers wanting to sell into anything that comes back up here, any retracements. But you've got net buy orders here, which it's just not come back for, but it has. As you see, it's just sort of come back. It's when it got down here, it come back and bought some, took out some of these, but it's no guarantee it's going to whip through. There may not just be the demand there, as you see here, the news or whatever effective on this particular day, it's sold off quite strongly. There's just no demand. But it does show us where there is potential demand above price and of course supply below price. Now, as I said, it really doesn't matter whether it's a stop loss, a take profit, a sell stop, a buy stop. Whatever the orders are, it's the sell orders are put together, the buy orders are put together, and they're treated as buys or sells. So simple as that, doesn't matter. So as I say, I'm looking at net positions. Some of these will show you them their buy orders and their sell orders separately, but I just really want to focus on the net position when I'm looking at these. Hence, here we go. So it's a little bit, I mean, this is just a zoom in of that previous screenshot where you see the, as I say, the net buy orders. I think we were, I'm sure I was in a long position trying to get hold of these, but it just nipped off and eventually come back the next morning and took those out there. So we were looking to trade with this movement, and it took until the next early next morning before it went off and clipped all those buy orders. Now you can see there's net sell orders above. It doesn't mean it's going to stop there. Of course, if there's demand carries on, those sell orders may be just washed away. And as I said, it is only one sample broker. It's not all brokers. But then this is sold off here, taken out that, as I showed you on the bigger picture there, they sold off these sell orders and then pushed up again. So it's, as I say, a useful tool here. I've overlaid it, and we just make this available. You can read more. I'll give you a link below. But you can see, it will go through sell orders, of course, but it's just attracted, and you'll see sometimes when it's gone past where there's no backfill of buy orders, so there's no demand sitting up there. So it's just found it even easier to start rolling over. Okay. Now, as I've already said, it's not surprising to see orders above previous highs or previous lows. You'll see them all the time on here, but not all of the time. So there are times when, well, those orders aren't there and it just never gets there. Sometimes it will just be forced there because traders buy on the cash market at the time. So it's not all reliant on the orders, but it does give us a good guide. Now, from my analysis, there's a reasonably high probability that if in the right circumstances, if those orders are just above price, the price will get, it often drops, pops up, hits those levels, and then carries on. And it sort of coincides, you'll see it coincide if you're not looking at the order book, you just see a new high come in and then it drops in a retracement. Everyone calls that a double top, and okay, or a slightly new higher double top, and off it goes. Some people call it all sorts of things like butterflies and everything else because the price action has been put in there. But there you go. It doesn't really matter what it is. It's new highs and then it's seen a retracement. Okay, so looking at that's one side of things, and then there's the other side of things. So I've looked at the order book in terms of potential orders that are sitting there. Now I'm looking at the retail sentiment. Retail sentiment is taken by and looked at by the actual current open positions that people are in. Now, many traders are starting to take this contrarian view, and I think it's almost you've got to be careful with this because they think all retail traders are going to be wrong all the time. I mean, they're wrong 80% of the time according to their profit, but it doesn't mean to say they're wrong all the time. But we'll move on to that later. But the important thing is, if you can, okay, you can, a lot of companies will give you the ratios, the percentages. A lot of brokers will give you the percentages of long and short. I've seen some quite nice ones recently, but what it doesn't do is show me where they are on the order book, because if you can see it overlaid on an order book, I say order book, but on the book itself, if you can see those positions relative price, it's a lot easier to understand things and see where things are actually sitting, and you can then start pulling them together. Now, let's just run through here. In terms of what traders do, they have a tendency of holding their profitable positions for much less time than they hold their unprofitable positions. In other words, their patience, it's been proven over the years that a major US broker some years ago gave their data to a research part of their business, and they took this data and they said actually retail traders are very good at picking the right entry, but they're very bad at holding on to their entries in terms of they get into a position and they close far too quickly. Yet when they're in an unprofitable position, they will hold on to that unprofitable position and give it a bit extra scope. And the net thing is that they may have a better win rate, but they're not profitable because they're losing trades, lose the money, or more money than they're making on their profitable ones. Therefore, if we're seeing a lot of large, long open positions below the current price, these might be closed quite quickly. And this is this important understanding of this speed of holding. So if price is above their positions, they're in the money. And if they're in the money, they tend to get closed quite quickly. So we can use that information. And the same goes with shorts. If there's a lot of shorts that are currently above price, so they're in the money, again, we can use that position. So what we tend to get in a normal open position, so we call it the order book, but it's actually open position, it should be rephrased here. You'll get unprofitable longs generally across above the price, and generally you'll get unprofitable shorts below. That's the way the book's made up. In fact, here you go. Here's a sample that I took from this afternoon, and you can see how quickly the orders are changed as well. So what we had here was net sell order, sorry, not orders at all, net sell but short positions here, and they were in the money, those short positions. The price was going down, they were in the money. It didn't take much to scare them out of their positions though, and as we will go through here, you'll see they ended up at buy positions which were out of the money, or some of them were just in the money actually. But you can see the net position with the balancing of the books, the way it goes, it is a very fine balance. Now, of course, this isn't every single trader. It's just the actual, this is the summary of all the traders. So there'll be some making some money and there'll be a lot losing some money potentially. But this is a common view of what we see day in, day out when you're looking at the positions. So when they do get into a profitable position, you often see those zip away quite quickly, and when they get into a losing position, they stay for a long time. In fact, you can see on this chart of the pain some of these are willing to take is generally a picture like this. So you've got fewer people willing to take less pain, as it sort of, but these people back down here, they've been in this price for quite a long time. They're well out of the money, and they're losing. These people here, these longs, again, same effect, that you get this sort of more people underwater nearer where the price is, and as it gets further away, you get fewer people that want to take that much pain. The pain threshold gets too high on either this way or down this way. Anyway, so the main point here is by looking at this is more important to me, knowing this, than when it's in its normal position. Looking at this, or knowing that if I can see this rather than know there's 80% traders short, this is more important to me. I can see, okay, in this particular case, that those orders may get filled quite quickly. It might be worth, if there's a trade on, technically, to be buying towards that those levels. It can give you even a point to where to look for. Okay. So let's put both sides of the market together. What we're going to do on the left-hand side, we've got the open orders. On the right-hand side, I've put open positions here. Now, if you want a net short bias, so this may be where price has been coming up there and pushing up, and you get into this position where all of a sudden you start seeing some net short positions building underneath the price. We would expect, support-wise, we'd expect net buy orders. But if you've got net short orders there and some profitable longs, so these profitable longs below the current price, but remember they're fickle. So as soon as the market starts moving towards them, they'll drop that. So effectively, those longs are selling. These sell orders are selling. So it's a short bias when you see this market. So if you're looking at a market and deciding on whether to buy here, it may have just come up to a prior low or something like this. If you see this, it may be worth holding a little bit, or if you're wanting to sell, it may be a go with. So you too can chase these sell stops. Price resistance, on the other hand, you've got unprofitable longs above, so these guys are already feeling the pinch, and you've got net short orders. So these guys ain't going to change too much. So if price is coming up, well, they would like to stay in. If they're seeing price come up, they want to stay in there. So they're not going to do anything. The shorts, effectively, those short orders attracting anyone wants to sell effectively, but not necessarily, and it just effectively gives us resistance. You're running into resistance of the price. So the net short orders, which is a normal thing above price, with large unprofitable longs above price, could see price just coming there and bouncing back off. So that gives us price resistance. The net long bias. So what we have here is net long positions and net open short positions, net long orders, beg your pardon, and net short positions. When the price comes up to here, it's got this demand kicking above there, so buying orders are causing demand. These shorts get spooked out, they get squeezed effectively, and we see a net long bias. It draws the market to the upside, or the potential for it to be biased towards the upside. Alternatively, in terms of support and that giving that more bullish idea, if you've got net long orders, which is usual, so if you've got long orders below price and quite a sizable number of net orders, and unprofitable shorts, those unprofitable shorts, as prices around this area or potentially moving up, are going to start wanting to put more pressure and give more support along with those orders there. So the squeeze overall, they're not going to want to close until they have to, and as price starts moving away, they'll start closing, and it give price that sort of potential support. Might pitch through, but so there's still, as I say, some support. So as I've already said, you only have to really looking at one book out there. It's not a exchange. It's a shame in that sense that we don't have a massive forex exchange. But goodness, how many people would be arguing about where it stays or it's placed and everything else. Of course, you've got futures exchanges, etc. But in terms of the cash market, there's loads of books out there. Effectively, the interbank levels are what we're really ideally looking at. But of course, if you're looking at a broker's book, it is one book, but it's a good example. The spot market volumes will move it more, so that you've got to be aware that if a trader's there's plenty of volume starting to come in one way or the other, it can shoot through these order books, and of course, in that basis, it's a bit of a guide. You've got to watch out for news events. Will just whip through orders like there's no tomorrow, because everyone, I say everyone, but a lot of people may be chasing that news one way or the other. Where can you find them? You can find them out, you can do web searches, but we do have, as I say, our own version, which you can subscribe to. If you go to easytrade.com Forex order book, I will put the link below this, and you can just click on there and take a look. So that is the order book and how you can use it. As I say, we just modified it in terms of looking at net positions, because it's much easier visually to see what you're actually doing. Okay, I hope you find this video useful.